morning, I'm Ryan Lehman, and this is Markets in a Minute for the week of June 22nd. We've got a lot to talk about this week, so let's just go ahead and jump right into it. Starting with Iran, the U.S. and Iran came to a formal agreement last week that opens up a 60-day negotiating period to work toward a more comprehensive deal aimed at Iran's nuclear program and a formal end to the war. The largest impact here has been on global energy markets, with WTI crude oil dropping below $75 per barrel in Thursday's trading. This puts us well below the high of $112 per barrel we saw at the peak of the conflict back in April, but prices are still about 30% higher than where we were at the start of the year. Now, moving on to the FOMC meeting, investors got their first glimpse at how monetary policy may look under the new chairman, Kevin Warsh. And honestly, it was not nearly as dovish as many had hoped for. In fact, equity and bond markets both sold off in unison following the release of the Fed's statement, as well as the release of the fresh dot plot. Now, the dots were really the focus, though. They showed a median rate forecast of 3.75% for 2026, up from 3.4% in March, and they now imply at least one rate hike in 2026. Digging into the details, we saw 9 of 18 officials calling for at least one rate hike this year, with 6 of those expecting 2 or more hikes, while the remaining 9 saw no move or one cut. Notably, though, Kevin Warsh refrained from submitting his own forecast, which really speaks to some changes we may see at the Fed under his leadership. Warsh tends to be in favor of less forward guidance, which was on full display in his shortened statement, as well as his brief press conference. Now, in our view, this could prove to actually be a positive for the market as a whole. One of the issues with full transparency is that you end up with all investors on one side of the proverbial boat, and any unexpected surprises can easily and completely upset things, just like it did back in 2022. Less transparency actually promotes more price discovery, especially in bond markets, which at the end of the day should benefit the actual functioning of markets. Now, looking ahead to this week, markets are going to continue to be focused on progress on the Iran front, and in particular, traffic in the Strait of Hormuz. We did see a marginal amount of traffic last week, which is clearly better than zero, but we're still nowhere near the average of 120 vessels per day that we have seen historically. This may, however, take some time to really ramp up, as ships still need to be repositioned and infrastructure may need to be repaired. Now, on the economic front, the big release here next week is going to be PCE on Thursday. Just about all of the measures markets are going to be looking at are expected to see an uptick from last month. However, it will be interesting to see how markets react, if at all, given the recent decline in energy prices and the progress that has been made so far in the Middle East. And with that, that'll do it for this week. Thank you again for watching. If you enjoyed the video, please feel free to like, share, and subscribe. We'll see you next week. Dude, I think that should do it. We'll cut it there.